the client we just ran, I mean, they had offers between 6 million, I believe, and then about the top one was about 30 million. So it's a broad range, right? So in terms of business brokerage, I think if you're selling a company that's less than $1 million of EBITDA, you're typically going to find them land between the 3 and the 6 mark.
Clay, thanks for coming on today, man. I'm looking forward to this one. You were referred to us by a good friend and spoken highly of, and our conversation, our phone call we had was really enlightening. So I'd love to dive into that and kind of share that with some of the listeners on some of the stuff that you're working on and what's actually available out there to people who are building businesses. So thanks again for coming on.
Yeah, absolutely. Enjoying it, guys, and looking forward to this call as well. And let's get started.
Yeah, so usually starting off, we like to just do kind of like a run up to where you got to now.
Yep.
So just give us the Cliff Notes version of kind of the journey to where you're at now. I know you talked a little bit about starting a business, but give us a background.
Yeah, absolutely. So just quick background, went to school, got an accounting degree, thought I was going to be an accountant. Actually, I didn't know before then, actually started off in dentistry. Found my way to accountant and then graduated college, didn't really have anything lined up. And I found my way actually into investment banking through a local boutique advisory firm in Kansas City. They really focus in two spaces, traffic safety and physical therapy. And, the plan was to always start my own company anyways. I just didn't know what the company was going to be yet. Just wanted to do something on my own is the best way to put it. And, had a friend from college, recruited him to our firm, and basically just told him, I was like, hey, let's learn this for a few years. Let's start our own thing. And so we were actually planning to leave like midway through 2020. But as you both know, first quarter of 2020, COVID happened. So about 6 or 7 of our deals at that time we were both working on got delayed. They actually didn't close for another like anywhere from 6 to 12 months. So that really kind of pushed our timeline out because you develop relationships with your clients. You want to help them get it done. So, that's kind of where we were at. Starting essentially in 2021, really started kind of gear into things. And we quit our job in 2021. And then we started Add Astra Equity in 2022, right in the beginning. Didn't have anything, didn't have clients, didn't have, we had just had our own money. We saved up. We each put in, a few G's and got rocking and rolling from there. I started with the sales side. His main focus was on the advisory side. I'd sign the client, he'd sell them. And it's really what we've been doing ever since. But both of our background is in accounting and finance and on the service side of helping business owners sell their company. So, fast forward to today, our first year, slow, as expected. When you're trying to help clients sell, it can take anywhere from 6 to 9 months. And we knew that. So I think we closed 1 or 2 deals the first year. And then in our second year, we closed 9, which was in 2023. And then in 2024, this year, we're expecting to close, anywhere from 10 to 15 deals. Wow. We've had some pretty fast growth. We started out with just us two. Since then, we now have 4 employees, 3 on the transaction advisory side, 1 just kind of helping with all the admin aspects of the company, where we just don't have time really to focus on as much. And that's really kind of where we're at. We think growing or moving forward, we'll see where it goes. We like focusing on high level clients, so we may just start getting really picky on who we bring on as a client. And just for your viewership, we're mainly sell side. Hardly ever do we do any buy side. So we really believe in helping business owners run a process. We've always yielded the best results for our clients. We've heard a lot of stories of firms. They don't hate processes, but they don't necessarily care for them because they know they're not going to get a proprietary deal most likely, or something that's less than market. They're going to have to pay a little more. So that's kind of where we're at today.
And so your business is mainly run like a consulting shop, or how do you guys what's your core business model?
Core business model is, it's consulting. It's merger and acquisition advisory services. So basically we help business owners sell their company to a third party buyer. whether that's all of their business or a smaller portion of it, such as like, well, a majority position usually. So anywhere from just say 51 to 100% of the business is what we're helping business owners doing. So we're not helping them like we're not helping startups raise capital. We're not usually helping them do minority transactions. It's strictly, hey, you're looking to either bring on a new partner that can help take your business to the next level. You're looking to retire in the next few years. You're looking to diversify your net worth out of your business and put that money somewhere else. That's really what we're helping our clients do. And so we're walking them through the M&A advisory process. So, kind of walking through the process real fast. The typical process can take anywhere from, I would say, 6 to 9 months if the business is ready. And essentially the first couple months are us really collecting data, analyzing the business, getting it ready for market. We're building marketing materials for our client. We're developing buyer lists that we think are good targets. And then the next few months after that are really marketing the company. And then, fast forward to LOI, could be anywhere from 4 to 6 months in. Now you're going into due diligence, which depending on the industry can take 45 to 120 days. It really just depends. And then depending on any hiccups, that's where it could get extended as well. So that's kind of what we're really helping our clients do, and I think the value we bring to the table, one, is managing the process. It's a lot of when a business owner is running their business, if they're trying to manage their own process and they want to do it correctly, which is getting in front of multiple buyers, it can be very overwhelming. So we really help manage that process. We also seen pretty much everything, so we can help guide them through what's going to happen. We also help a lot with cleaning up the financials prior to going to market, which I think is a big value add. Last thing you want to do is go through a process, get an offer you're really excited about, get into due diligence, and then find out there's something really wrong in your financial statements to the point where the buyer's either going to back out of the deal or retrade it. So that's where we're kind of there too. And then I think the main thing really is, like selling a house, the more bidders you get on your business, the more leverage you have to negotiate a better purchase price and, more importantly, a transaction structure. Most of these business owners are looking, for the most part, either cash at close or equity. The last thing they want to do is have an earnout or a seller's note. It comes with the industry that will happen at some point, but the goal is, hey, let's get you the highest purchase price possible. Let's find you a partner that fits your needs, and let's also get a really really solid structure in place for you. So cash and equity, depending on what they want. So obviously, every business owner is unique in their own right. So we work with them on their goals before we go to market.
Yeah. Well, there's a lot in there. I mean, you just said at the end you work on the goals. Is there something you kind of do with prospective customers? You kind of work through them maybe a year or two before they're ready to sell, kind of look at over the things, maybe give them some guidelines for them to tie up their financials and give them a little, you know, like a bump in the right direction before you actually start working with them as a client?
Yeah, we now us specifically, we may give them kind of high level, hey, this is what buyers are looking at. So if you're trying to get the highest value for your business, this is where we steer the ship. Now, if they're looking for someone that's going to come in and monitor that and really push them day to day, week to week, month to month, we usually try to get them in front of a consultant that specializes in their industry. And the reason we do that is because we're just manpower. We just don't have the time. Like I said, we're managing multiple processes for our clients, so trying to also do that and then consult them on growing their business. It's a lot of time and a lot of effort, and we just don't have that time or effort. So if they really are looking to, per se, I guess, really get their business ready 1 to 2 years leading up to selling the company, we're there on the sidelines answering the questions that they call us, but we really try to get them to work with a consultant on that first. And it really depends what they need too. Some need operational fixing, some need financial fixing. It just depends. So we do try to pinpoint that before we, put them in the right direction.
How would you differentiate yourself from just like a business broker on the sell side?
I would say business brokers, they really focus usually they try to define it three different ways. It's business brokerage, M&A advisor, and then investment banking.
Hmm.
Business brokers typically will focus on things that are less than 5 million in enterprise value. M&A advisors, they typically come from investment banking space, and their focus is really companies that are going to sell between say 5 and 75 to 100 million. And I would say investment bankers really focus anywhere from 75 up, and that's kind of where they focus. Um, in terms of the way we differentiate ourselves, I think it's a service space. So we really try to do the best we can for our clients. We really try to give them our honest opinion on what we believe. Some clients, when we start working with them, they're like gung ho on selling, and we try to give them just the straight facts. We're just like, hey, listen, like this is what we think is going to happen when we go to market. Are you okay with this? For example, we had a client, came to us, thought they had a 3 million EBITDA. We started diving in the numbers. They really only have like a million and a half most. So valuation's going down at least 50%.
At least.
So our job is to, manage their emotions there and let them know, hey, here's the situation. Are you okay with us still going to market? Because what we would recommend, and they had a really nice growing business. They were restructuring some things. They were getting more from project based work to service maintenance based work, and so which is more valuable in their
Right.
market. And so we really wanted to kind of push them off until the end of the year, but they were ready to go. We gave them our honest opinion. They were ready. And some clients are like, hey, actually, yeah, let's wait. Let's hold off. So I would say our differentiator is really we try to get hands on as much as possible. We don't just sign you up, put you on a website, and
Hmm.
hope for the best. We really do take a proactive approach in our ways.
Yeah, and with that, like when you have a company that is ready for sale, like you said, you're not just putting them on the website. Are you kind of shopping them off, auctioning them off, or like presenting them to strategic potential buyers? Where do you find those buyers, and what are you doing with that typically?
You mean in terms of the marketing process, in terms of are we reaching out to these buyers directly?
Right.
Are
Yes.
they PE buyers? Are they private buyers? That sort of.
So we try to do a mix of since our clients are typically on the larger side of things, we typically try to target private equity groups, strategics, whether they're private equity backed or just large corporation, and then really kind of family offices. And family offices can fall in private equity, however you want to look at it. Typically, they're a longer term horizon hold. They may not be as picky on the space. They may just be looking for something with strong cash flow, not necessarily fast growth. So those are the three types of buyer groups we really try to bring to the table for our clients. I would say we try to avoid individuals unless they have a proven history of buying or they have the funding capabilities to do so, just because they may waste a lot of your time per se. You can get a lot of, they may put in a really nice offer, but does that offer really have any water? So that's really kind of focused because sometimes they do fall in our buyer list. I mean, it is what it is. They're never perfect. You can run them in stages. You can have tier levels of different buyers, but the whole point is you have a goal and you really go to try to accomplish that goal. So whether it's, hey, we want to try to get you 10 offers, 15 offers, 20 offers, it just depends. And then really kind of reverse engineer how many people do we need to get in front of? Who are the right people to get in front of, depending on our clients' goals. If our clients, for example, we just ran a process for a client. One of his main goals was he really wanted help. He needed help growing his business. He's got it to a really nice level, really profitable, but he's having trouble getting people to grow. So, everyone keeps getting pulled away and they're going to different companies for whatever reason or whatnot. There's just not enough labor in his market. So what he really wanted was a strategic acquirer to come in and kind of help with bringing in more staff is essential because he's got all the work in the world. He can sell the work all in the world, but he just needs help actually doing the work. So, for example, that was one where we just ran a strategic mandate for him. Got him 27 offers actually, and now we're
Wow.
kind of filtering through some of those to see who's best fit moving forward. But to answer your question, yes, we really try to get them in front of those three buyers, those three type buyer groups.
Okay, interesting. So you guys are working outside the parameters of strictly selling a company. You can kind of find strategic partners or find funding and do other things as well?
Well, no. Well, selling, I guess it just depends how you look at it. Our client, I guess the basic criteria for when we're taking him to market was want to sell a majority of the business, want to find a strategic partner to really help. Now, when I say strategic partner, that could be a corporation. It doesn't need to be a person.
Mm-hmm.
Um, so it could be, a bigger corporation that has a really strong recruiting team that could then help bring in more staff underneath his umbrella. Or maybe they have, staff sometimes are utilized or looked at as assets. Maybe they have assets that aren't being used at max capacity. So they buy our client, then they can then put some of their staff underneath his group and really kind of help pump up the company because now he's got a better and a bigger team underneath him. So in terms of really what we help our clients do, we try not to really focus on fundraising per se. So we don't really try to work with like startups or pre-revenue businesses or companies that are looking for capital raises. We really try to focus with clients that are looking to sell for usually those three main reasons: retirement, want to bring in a partner to help grow the company. They've taken it to where they can get it. Now they need help from someone with more power behind them. Or our clients are looking to diversify their net worth per se. So they're really looking to take cash out of the business or equity and put that in different areas of their life, whether it's real estate or stocks or bonds or maybe another business.
Mm-hmm. We talked about last time when we had our conversation. We talked about like what these buyers are looking for, especially like the PE side. I'd love to dive into that a little bit more on like what's the perfect business for them that they want to buy, like how to make your business attractive to a buyer.
It's tough. Every buyer is a little unique, right? So, I would say what we see generally in terms of most private equity groups is they're typically looking for something that's stable. So they're looking for mature businesses, so say north of 5 years in their life cycle. They're looking for companies in terms of EBITDA north of probably, I would say 1 to 2 million. And now that's if you're like an add-on. If it's a platform, some of them are looking for north of 3 to 5. Every private equity group, there's different levels. There's some that focus on like transactions that are north of 500 million, some between 105, and some that'll focus on the lower middle market. So it's obviously a broad group, but in the markets we play in, typically they're looking for a company that's doing between 2 and 10 million of EBITDA. Or typically they have some sort of reoccurring revenue nature to them, whether they're working for the same customers year over year, they've got contracts in place. They're looking for typically growing industries or niche industries where clients have a very strong foothold in their space. Um, they're always looking for customers that are not providing a lot of the revenue to the business, so low customer concentration. They're looking. It now depends on the buyer. Some like to do hyper acquisitions, meaning they're buying multiple of the same companies in the industry. So they may be looking for very fragmented industries. Some may not be so focused in fragmentation, depending on what the goal is, what their thesis is. But I would say, kind of overall, they're really looking for someone north of 2 million EBITDA, has a really strong recurring revenue nature to it, whether that's servicing the same customers or service contracts, low customer concentration. Preferably would like a company with a strong management team that's not dependent on the owner. I would say that's one of the more places where they usually just be like, okay, that's fine. We don't really need to be too concerned there because they can bring in an operating partner to kind of help expand their management team. Um, and then obviously growing business or growing industry and pretty strong margins. So probably north of, I would say, 10% in most industries.
And then maybe is geography in there too, growing like market?
It's well, in terms of geography, that's pretty specific. It's some say they're all focused in the 48 continental, and then
Mhm.
some may be focused on just the Northeast, some may just the West. It's really hard to figure out unless you just talk to them directly. But I would say most of them are pretty much just focused on the United States. at
Gotcha.
least our buyers that we represent
Hmm.
our clients to.
Gotcha.
So, but it's pretty broad.
Interesting. And you mentioned that some of the entry levels for like a roll on or like at least a platform company are kind of the maybe $2 million plus. Where do you think that line between like a business broker selling a company for a 3x versus PE coming in paying 5 to 10 plus times multiple? Like what differentiates that? Do you think? Because we can see you can see some on market deals that have similar EBITDAs, but they're the multiples are a lot smaller than what you deal with and who you present to. Is it the quality of the company?
Or the size of the EBITDA.
Could be. There's a lot of things that play into kind of the value of a business, but I would say typically what we find is getting the best value for our clients is really just getting in front of a lot of buyers and really getting a lot of offers and being able to leverage that to negotiate or at least give you a broad range of what's actually out there. So, for example, in the CPA world, some may just give you an offer on one times revenue. Some may offer 6 to 10 times EBITDA. It really just depends. So, for example, the client we just ran, I mean, they had offers between 6 million, I believe, and then about the top one was about 30 million. So it's a broad range, right? So, in terms of business brokerage, I think if you're selling a company that's less than a million of EBITDA, you're typically going to find them land between the 3 and the 6 mark, just based on what I've seen in the market. But every business is different. Like if it's a tech business and it's showing 500K EBITDA, well, are they being valued on EBITDA or should they be valued on revenue? Like what buyers do
Hmm.
they get this client in front of? What's that look like? So I can't give a great answer on that just because it really depends on the client, on the market, on the business. There's just so many factors that go into play.
And the timing of it as well, right? Sometimes different
Timing,
industries are a
timing
hot
definitely can help.
commodity.
Yeah, I would say there's certain industries right now that are getting acquired that multiples are more on the lower end right now, but I think you'll see them jump up pretty quick in the next 2 to 3 years.
Which
Um,
ones are those?
which industries?
Yeah.
I think residential roofing. You'll see a lot of. I think multiples will increase quite a bit in the next couple of years in that
Hmm.
space. Similar to HVAC, when HVAC was getting acquired up pretty strongly in the early or like 2016, their multiples were lower, obviously. And then once more acquirers started getting in the space, obviously everything gets competitive
Hmm.
and gets pumped up. And I think you're going to see that happen in residential roofing. When we first got in the market, I would say because my partner actually found us into this market. So when we first started our company, I actually had a family friend that reached out, wanted to really kind of understand the dynamics and what his company would sell for. So we're like, okay, well, let us do some research. Let's get back to you because it's not a market we necessarily play in. We don't understand it well enough. So what we did was we called up about 10, 15 private equity groups that had companies in the space and really just picked their brain. Like, hey, what are you seeing? What do you guys target in this space, in the roofing space? And so we took on a couple clients, marketed them. At best, we were getting maybe 20 interested firms out of the broad group in the United States. And now
Hmm.
I think if you take a residential roofing business to market, I wouldn't be shocked if you get over 50 interested parties that potentially want to make an offer on that business.
Wow.
So and that was just a year and a half ago.
Hmm.
That's a pretty quick change. And we're having people come back to us now that had zero interest in it before. Now all of a sudden they have a ton of interest.
Wow.
So it's a pretty interesting mix. Once one big domino falls, the rest just kind of follow right with it. Especially in the private equity market.
Sure. What sectors do you specialize in? I know we've had previous conversations around kind of the home service, more kind of the HVAC, as you mentioned, electrical, plumbing, those sort of things. But what else do you guys work on?
Yeah, so we focus on some professional services like IT consulting, staffing, and like CPAs now. So that's one we're really starting to dive into. In terms of kind of the construction space, which is very broad, obviously, anything with like that has to do with like a commercial building or a residential home or just a home in general, I guess. We focus on companies that focus on those. So you could flooring, steel infrastructure, manufacturing within those arenas, you know, plumbing, electric, whether it's on the commercial or residential side, you name it. That's really kind of where we focus. We also have a really strong background in like roads and bridges and highways.
Hmm.
We did at our previous firm, we did a lot of traffic safety work. So that's where my partner and I really kind of focused a lot as well. And then in healthcare, we focus on, you know, physical therapy, dental practices, vet practices. We really haven't done too much in dermatology. We're starting to see a lot in the med spa space, but we haven't really dove into it. And mainly just because transactions are smaller. They're, most of them are less than 5 million. And so that's just why we've kind of really haven't touched that space as much. That's really kind of where we focus or find ourselves playing in. And anymore, it's just because we started there and we're starting to get referrals in those spaces. So, and because we understand those spaces too, and have developed a lot of contacts in the space. Um, and then I would say like spaces we don't really play in. We really don't play in SaaS. It's just something we've never actually just had an interest in getting into. Uh, so that's really probably the only one. And then there's obviously niche spaces where you may find yourself into, or you may starting to learn about the business. You're like, oh, this could be interesting, and maybe we need to do some research here and see what's actually out there. So, but that's really where we find ourselves playing in.
Where do you see the PE industry going as a whole, as far as like increasing capital to put to work, and how that plays with like valuations and offers, and these guys need to put their capital to work if you're a seller.
You mean on this? Yeah. So you were talking about the buyers when they need to put their capital to work, right?
Exactly. Yeah, all
Yeah.
these PE firms raising money, and it seems like more and more people are getting access to that, that strategy. So it's going to be more and more in there, so that it's going to be even more competitive.
Yeah, that's for sure. I mean, in terms of where it's going, I mean, it's growing. I guess is the best way to put it.
Hmm.
It's There's life cycles for funds, so it's really kind of just following private equity groups and seeing what's next on their agenda, and then are they raising a fund moving forward? Are they not? So really, when you have contacts, you kind of play around with those. I know a couple of years ago, I think we hit the record in terms of capital raise. I believe it was like a couple $1 trillion, something around that.
Hmm.
I saw a bunch of reports get shot out. Um, I think what you're going to see too is a lot of people move down market, so lower middle market.
That's what I was going to ask. Do they push up the prices further, or they just start going further down the
Yeah,
market?
I mean, you will see the prices get pushed up, but private equity groups, they're pretty. It really just depends where they're at the actual firm. If they
Hmm.
just raised, um, typically what I find they're if they're kind of at that point where they need to start deploying the capital, they're going to put out higher offers.
Hmm.
If they just raise the capital, they may also start putting out higher offers. It just depends where they're at in terms of that perspective,
Hmm.
because they want to get their money starting to work, because that's just kind of how they
Right.
get paid too.
They're against the IRR
So
clock.
yeah, but I also know private equity groups, they're very disciplined. They're not going to be idiots about it, or try not to be.
Hmm.
They're not going to, on a business that's getting 6 times offers, they're not going to go put out at 10 times usually. And typically the reason is because, well, they'll just go find another opportunity that's they can get it on a 6 times. So
Yeah.
really, it's funny because sellers, they think, really their biggest competition is other sellers in the market.
Right.
So if a seller is willing to take a 6x, well, that's an opportunity cost for private equity group. So they're going to go make the offer there. They're not going to
Hmm.
come back to this seller that wants the 8x.
Right.
So just as an example. But I see what I think you'll start to see is a lot of groups move into lower middle market, and may even go as low as a million, 500,000 in purchase price. I know for add-ons for a lot of private equity groups, they don't really have a minimum. It's just more
Hmm.
about what's the situation look like,
Yeah, if
where's
it
it
fits.
located, does it just fit? If they have a strong concentration, for example, in a city like Dallas, and someone brings them an opportunity, small add-on, less than $500,000, but has some strong revenue or something like that. They'll usually just buy it if the purchase or the asking price is pretty reasonable.
Hmm.
Um, so, but that's what I think you'll see happen is more push towards lower middle market. Uh, And then in terms of valuations, I mean, they do kind of follow the debt cycles. So, like when interest rates goes up,
Yeah.
you do see valuations dip a little bit, mainly because private equity groups, they just can't put as much leverage on the transaction. So then the question becomes, okay, well, how's our returns get affected? Do we
Mhm.
want to put more equity into the deal? Or do we just be okay with this offer because we know if we get in at this level, we sell at this level, this is our IRR, this is our
Mhm.
return of money.
And they got a higher hurdle.
Yeah,
The
exactly.
hurdle goes up,
So it
so
just
that
depends.
also goes down.
It's like everything in this market is the question always comes back to it depends. It's all situational for a lot of firms, for
Mhm.
sellers, for the market. So, there's some markets in terms of like industries where some are really strong, valuations are going up, and some are just declining. It just depends. I think, like for example, back to the roofing, I think you're going to see valuations increase in that space over time, over the next couple of years, even with all the other dynamics going on in terms of like interest rates and stuff. So, and with just kind of the U.S. in general, I mean, right now everyone feels like economy is declining a little bit. I
Right.
haven't really noticed it, but I know a lot of the clients have, and that's really really well. I'll start to feel it is when they're feeling
Mhm.
it, and they're relaying that to us. That's when we're like, okay, well, what's the situation? What's going on? Is it our client or is it the industry in general?
Right.
So
Yes. So that's the buy side. What about the sell side? I know we see that we always hear the statistic about 10,000 baby boomers turning 65 every day. What do you see as far as supply for a lot of these deals? Do you see more boomers like ready to put it on market? What are the dynamics of that?
I guess, I mean, I just haven't really looked into it. I guess we do our own sales and marketing, and
Hmm.
I think you'll see a ton of businesses get ready for market. Let me back up. Okay. So, what I think you'll see is a lot of baby boomers ready to retire, but I don't think their business is sellable. I think it's
Hmm.
just for most of these businesses that are, coming to market, they're small, they're dependent on the one guy
Yep.
who maybe has two or three employees. I think that's most your cases.
Sure.
So if that's the market you play in, yeah, you're going to see a huge influx of supply.
Hmm.
But that's not where we necessarily play.
Right.
So I would say our supplies remain pretty much the same, from what I can tell.
Mm.
So,
Well, I
but I'm
guess it's
also,
like a bell curve, like anything, right? Like I'm sure there's a
yeah,
normal distribution of the ratio of businesses the size that you guys would work with.
exactly. What you
Hmm.
may start to see is an increase in terms of business out there because now if these boomers are starting to retire, well, their customers need to go somewhere.
Hmm.
So that might be where you have the best opportunity to buy. If you're, for example, if you're trying to roll up HVAC companies, well, target the older gentlemen that have employees, maybe of 5 to 10 employees, and really just start to acquire them and make sure see if they have a succession plan. If not, just be like, hey, you don't have a succession plan. Why don't we work with you on one? And
Hmm.
why don't we buy you out over time so you're just not shutting down the business? You're actually getting something for it because it may not be worth something to someone else, but it might be worth something to someone that's looking or interested in doing smaller roll ups.
Yeah. Well, it doesn't have to deploy millions and millions of dollars.
Exactly, and you're getting a good offer on a business,
Hmm.
or you're getting a good value for it if you're a buyer,
Yeah,
and
in
then
good terms. A lot of the times, those types of business, like we just got under LOI for one where it's like a seller finance deal because of the
yeah,
size. Like, hey, no one else is going to buy this. This is really the only way it makes sense for us.
exactly, and it makes sense for you guys, works for the seller, like it's a win-win, right? So,
Hmm.
and then on top of that, if you guys do it, it's not like you need to do 25 of them, you need to do like 3 to 5, and then you've got a
Hmm.
really strong business, and then you really just work on paying off that debt, generating that cash flow, integrating the cultures, integrating the businesses, and then over time, I mean, it's just the compound effect. You're going to see things just take off from there.
Hmm.
Hopefully.
Yeah, yeah. I heard a stat that it's something like 1 in 11 or 1 in 12 businesses that goes for sale actually sells. I think a lot of it's those guys you're talking about, the one man bands. So it'd be interesting to see as we get more and more of those on the market. Does it go 1 in 15, 1 in 20? Like, at what point does it like break down for these guys to find buyers?
Yeah. I don't have an answer, but I'm interested to see what happens too.
Mhm.
So, What I could start to see is what we've seen before is a lot of industry players may actually just sell together. So
Mm-hmm.
you may come across a seller that's got five other buddies that are his age that he just knows in his own market, and they're tough. They're very tough, but sometimes you see them just say like, "Hey, like it's me, but I've also got three buddies that also want to sell together. Our combined EBITDA or combined profitability is around $1 million, and we really want to try to get a higher valuation for the business." That could be some situations you may see come up over time.
Mm-hmm.
They are difficult. Obviously, each seller has to agree on value, has to
Right.
agree on post roll, has to agree on, hey, like what's the structure going to look like for the buyer. They
Yeah.
basically kind of have to negotiate against themselves in a sense to just make it attractive for the buyers. But at the
Right.
same time, they now have a sellable entity that a
Mm-hmm.
buyer may be interested in. So you could see that, and that could hopefully increase the odds of these transactions actually going through. So
Mm-hmm.
from what I've seen, even in the markets we play in, only like 20% of the transactions actually close. So the success rate's pretty low in general.
Right.
But with more of these
So,
baby winners entering the market,
so then do those guys just like close up shop, or like what happens with that 80% of transactions that don't go through, or they just sell
well,
to someone else?
it depends. In our market, they'll retry, or they won't sell for that year. They may hold off for a couple more years, grow
Mm-hmm.
things up. It just depends. But that's just what we've kind of seen in the market, or
Mm-hmm.
what the statistics I've read. Our personal close rate's about 90% for our
Mm-hmm.
clients. So, but it also can be very subjective on the client you take.
Right.
So, like, we're not taking on clients that we try not to take on clients that we don't think we can sell. If we don't think we
Mm-hmm.
can sell it, we just let them know, hey, we're not a fit for you.
Yeah.
We're not the best group. Here's where we think you need to go. For these reasons, they may have a better buyer network. They may actually focus in the space based on your size. It just wouldn't fit our network. So it's like any industry.
Mm-hmm.
You have your customers you serve. That as long as you know who your customer is, you should hopefully succeed in most cases.
Right. And then you guys are paid contingent, or like how are you guys compensated?
Yeah, so we're only success based fee only. We actually, I'll give my old firm credit. It was their idea to do that. So we don't charge any upfront retainers. We don't charge monthly fees. We do not charge breakup fees. We don't charge any reimbursement for our expenses such as like travel and meals. It's
Mm-hmm.
strictly, hey guys, we're partners here. Let us try to help sell your company. If we get it done, you pay us a fee on the back end. If we don't get it done for you, you're not coming out of any cost other than
Mm-hmm.
your investment of some time. And on top of that, what makes us different from our competitors is we allow is a lot of times what you're going to find, especially in this day and age, is a lot of sellers have already talked with a few buyers on their own,
Mm-hmm.
and they may have even received an offer. And so what we allowed them to do is say, hey, so this is where we kind of have a little bit of a non-exclusivity part to it as well, which sellers love. So we let them list a few of their potential acquirers they may have talked with previously, and just say, hey, if you end up selling to them during our process, and you know that's fine. You don't have to pay us a fee. They're non-exclusive. List them before, because once you sign after, then you're kind of everything
Right.
after that's letting us do it. And so, but for example, if I come across a seller, I talk to them. He tells me, hey, I've talked with A and B. We're like, great. List A and B on our engagement letter. If you sell to them during our process, you don't pay us a fee. If you sell to anyone else, you'd obviously have to pay us a fee.
Mm-hmm.
Um, and so that's sellers like that. It's kind of a non-exclusivity aspect. We also don't have any like long-term engagement period. So a lot of firms may require like a 12 to 24 month engagement to help for them to get your business sold. We don't do that. Frankly, we give our seller the option essentially if they want to cancel the agreement at any time.
Hmm.
It's a risk on our end, don't get me wrong, but
Sure.
we want to give our sellers the freedom and not have to feel like they're locked down with us specifically, especially if we're not getting the job done.
Right.
if we're not getting the job done, we don't deserve it. So we want to give them the option to get out and go get it done with someone else.
Yeah,
So
I can see why it's pretty easy for you guys to win business on. It's
yeah,
pretty low risk on
it's
their
friendly.
side.
It's when you're thinking about selling the biggest asset of your life. Well, I mean, at least for me, I can't say for everyone, but I don't know if I necessarily want to feel like I'm locked in with one person to go get it done.
Yeah.
Especially if I don't have a 10-year history with them, and I know that's what they
Mhm.
do. So it just depends, but that's kind of how we look at it.
Interesting. It seems to be like a bit of a interesting time in the market in general. Like we just spoke about, like the PE increasing. You got guys like Tony Robbins, writing books that would probably be a bestseller. Promoting PE. So we're probably going to have a whole lot of new eyes in the space. We have a record number of people retiring, so there's going to be all sorts of businesses. So I kind of see a big opportunity in things that like myself and Forrest are trying to do. Where we're doing the roll up. We're collecting some of these smaller companies and pushing them together to bring them up to a lower level PE. And I know I asked a little bit about this off camera, but before recording, but sort of how would you, from what you've seen and what you're looking for, what would you recommend guys in that space? Because it's probably a lot of the people that we know as well trying to do with that, maybe like speeding up funding through alternative funding methods, or just what things they're looking out for when we are collecting some of these smaller companies to bring them up to what you would want as a company that you can take to your contacts.
For us specifically, like what what would we want out of the buyers if we
Exactly.
were
So,
taking
so I'm buying
okay.
five small companies. They're all
Yeah, I would say that the key things we look for when we represent our clients to buyers is the first things first is we want to make sure the buyer has experience buying a business. It's really tough for us to work with someone who doesn't have any experience buying. There's a lot of unknowns, and it's not. We want to make sure they have the education in place when they're looking at our client. Um, do they know that they need to do this? Do they know they need to do that? And we want to make sure they do that. And the second part is because we're placing our client with a partner, and that reflects on us. So we want to make sure that we're placing them with someone that is going to take care of them, their business moving forward. Because for most of our clients, it's one and done. They've worked in that business or they started it 30, 20 years ago, and it's become their baby, and now they're getting ready to sell it. So we want to make sure it's getting placed in the right hands. So that's why we look for someone we that has experience buying a business, so it doesn't screw up the process essentially for our client. On top of that, we'd like them to have the funding available and ready. Typically a lot of buyers, the one thing they may not have is the debt financing or the board approval, which is fine. But as long as they have the the fund ready to go, meaning, hey, we have our own fund, all we would need per se is approval from the board and the debt lenders, which is pretty standard. I mean, they've got to do the quality of earnings test, make sure things check out. And then it's really, hey, take it to the board and make sure they're okay with it, and then go from there. We've had situations where it didn't plan out that way, and it's unfortunate. You got to take the client back to the other buyers, or sometimes buyers back out of our client for their own reasons, such as the business declines during a marketing process, which has happened, and it happens all the time. And so, what we try to look for is buyers that are pretty committed. Basically, like, hey, we really want the business. We like the business. We have the experience. We have the funds. And I would say those are the top two things we really try to look for in the buyers. And then from there, it's pretty subjective towards each buyer. It's our client at the same time when they're selling their business, they need to develop rapport with some of these buyers. So as we're going through the process, whether they're meeting them in person or on the phone or through Zoom, we just want to make sure that they're comfortable with those individuals they're talking with. Sometimes buyers get on the phone and they show no interest whatsoever in that phone call. So it's like, okay, well, maybe you're not the right party for our client. And because usually if for them, then maybe it's just another phone call. They saw 100 of these businesses already. They don't
Mhm.
give a shit. They're just ready to go buy this company and move on to the next one. And for our client, they want to feel special.
Yeah,
Mhm.
they want to save pair of hands.
Yeah, like they don't want to just be like, okay, well, we're just another business to you,
Hmm.
Because, well, what happens when things get tough? Do you just file bankruptcy on the business, or kind of let it sink, or do you kind
Yeah.
of get your hands dirty and help it out? So those are things we kind of look for. It's very subjective as you go through a process, but if you kind of capitalize on those first two, usually the third one will play out okay. So
Yeah, very good. Well, thank you so much. Do you have any, if someone was to reach out to you, what would the best way for that to be, you think? Do you have
they
website
could
direct?
shoot me a text. Honestly, I always get back to text pretty quick. So and my numbers. You want me to give it here?
Sure.
Yeah.
Yeah.
Yeah, number's 913-548-9634. Shoot me a text with your name and what you're looking to do, and happy to point you in the right direction. Or if there's a way I can help, great. If not, we'll get you someone that can. So,
Mm.
but
Yeah,
I
we can,
appreciate
we
you
can
guys.
attest to that. He set
Yeah,
us up with Gino, who we're working with, and just great with a guy with a lot of connections.
yeah.
So
Gino's great.
mhm.
If I would interview him if I were you guys. He's got a lot of experience, especially in the industry you guys are targeting.
Yeah, he's
So
on the list.
there you
Yeah.
go.
Yeah, I would encourage people to reach out to you if they're ready to sell or just they have questions about the industry.
Yeah, um, absolutely. Anyone can reach out anytime. So
Cool, man. Well, thanks so much for coming on. As usual, super informative. I'm sure we could talk for another 2 hours easily, but I want to be mindful of time. I really appreciate it, man.
yeah, absolutely, guys. Appreciate it, and looking forward to seeing what you guys do in your journey as well. Um, and maybe someday we're representing you. If not, hopefully we're selling something to you. So
Yeah, that's the goal. That's the goal to be one of your clients.
awesome, guys. I appreciate your time.
Cool. Talk
Thanks, bud.
soon.
Talk soon.